Hello everyone, welcome back to my channel. This is Dr. Ramnishri MG, Assistant Professor of Commerce, Government First Grade College, Kumta. We'll discuss BCom 5th Semester's Accounting Theory, Unit 5, Accounting Standards, Part 10, International Financial Reporting Standards. This part includes history of International Financial Reporting Standards, meaning of International Financial Reporting Standards. IFRS comprises development and acceptance of IFRS and list of IFRS. The International Accounting Standards Committee was established in June 1973 by accountancy bodies representing 10 countries. However, to begin with, in 1973, the International Accounting Standard Committee was founded with similar objectives. Various international accounting standards were taken by this committee. In 2001, the International Accounting Standards Board replaced the International Accounting Standard Committee with a remit to bring out the convergence between national accounting standards through the development of global accounting standards. During its first meeting, the new board adopted existing international accounting standards and standing interpretations committee standards. The IASB has continued to develop standards, calling the new standards International Financial Reporting Standards. In execution of their duties under the Constitution, the trustees formed the International Accounting Standards Committee Foundation on 6th February 2001. In 2010, the IASCF changed its name to the IFRS Foundation. Currently, more than 143 countries use IFRS in some way, and most of those countries require them and fully conform to IFRS regulations. India decided to adopt the IFRS by April 2011. Indian GAAP are sufficient, but to attract foreign investors, there is a need for financial reporting standards acceptable to most of the countries. IFRS stands International Financial Reporting Standards that consist of a set of accounting rules that determine how transactions and other accounting events are required to be reported in financial statements. They are designed to maintain credibility and transparency in the financial world, which enables investors and business operators to make informed financial decisions. The term IFRS has both a narrow and broad meaning. IFRS are considered a principles based set of standards in that they establish broad as well as dictating specific treatments. Narrowly, IFRS refers to the new numbered series of pronouncements that the IASB is issuing and distinct from the IAS series issued by its predecessors. More broadly, IFRS refers to the entire body of IASB pronouncements including standards and interpretations approved by the IASB, IASC, and SIC. IFRS standards are issued and maintained by the International Accounting Standards Board and were created to establish a common language so that financial statements can easily be interpreted from company to company and country to country. Objectives of IFRS. IFRS brings transparency by enhancing the international comparability and quality of financial information, enabling investors and other market participants to make informed economic decisions. IFRS strengthens accountability by reducing the information gap between the providers of capital and the people to whom they have entrusted their money. IFRS contributes to economic efficiency by helping investors to identify opportunities and risks across the world, thus improving capital allocation. International financial reporting standards comprises International Financial Reporting Standards issued after 2001. International Accounting Standards issued before 2001. Interpretation originated from the International Financial Reporting Interpretations Committee issued after 2001. Standard Interpretations Committee issued before 2001. Framework for the preparation and presentation of financial statements of 1989. Now we will understand the development and acceptance of IFRS. The due process comprises 6 stages. Stage 1, setting the agenda. Stage 2, planning the project. Stage 3, developing and publishing the discussion paper, including public consultation. Stage 4, developing and publishing the exposure draft, including public consultation. Stage 5, developing and publishing the standard. Stage 6, procedures after a standard is issued. These are the list of international financial reporting standards. IFRS 1 deals with first time adoption of international financial reporting standards. IFRS 2 deals with share based payment. IFRS 3 relating to business combinations. IFRS 4 for insurance contracts. IFRS 5 for non-current assets held for sale and discontinued operations. IFRS 6 for exploration for and evaluation of mineral assets. IFRS 7 for financial instruments disclosures. IFRS 8 for operating segments. IFRS 9 for financial instruments. IFRS 10 for consolidated financial statements. IFRS 11 for joint arrangements. IFRS 12 for disclosure of interest in other entities. IFRS 13 is for fair value measurement. IFRS 14 for regulatory deferral accounts. IFRS 15 deals with revenue from contracts with customers, and IFRS 16 for leases. So totally there are 16 international financial reporting standards exist. At the end, IFRS is a very broad area of study which cannot be completely covered in an article. The objective of this article or discussion is to bring all related aspects of IFRS and its related issues under one roof for a clear understanding for the beginners and the non business people. IFRS is driving the revolutionary world of accounting with over 143 countries either requiring or permitting its use. There is no doubt that the conversion to IFRS is a huge task and a big challenge for any economy as its revolutionary impact requires a great deal of decisiveness and commitment. These are the references. Being good is good for business towards sustainable business. Thank you for watching.